Good morning. Good morning. Good morning, everybody. So some continued weakness in Bitcoin, a little bit of continued weakness in Ethereum. If the reaction is a positive reaction, I am likely to increase exposure, but it would more than likely just be in the IWM ETF via TNA. And then if we were to, Jan, good morning, man, good morning. And if we were to get a pop in the Russell and the NASDAQ, I would wait for a healthy pop, and then I would also look to short the NASDAQ into that, and then run a long TNA, short NASDAQ. I'm going to look at COT data, though. Who knows? Because I really would like to see how crowded the market is after this most recent week. But the crypto space continues to act pretty heavy. You know, I think it's really important for people to remember where we've come from, right? Don't always just think everything is bullish all the time. Be completely neutral. And when you start to see some weakening price action, living below the 50, some things breaking below the 200, that's not, you want to figure out where money's going. Is NEO an HVC? No, I don't think so. I mean, it's obviously gapping up some more overnight, right? It's like 580s, but I wouldn't go chasing this. Right, I had this little cleaner bull flag in here. And I wouldn't, of all of the electric vehicle names, I would rather own the one that's acting best, which is XPEV. Personally. It depends. How do I handle stop loss orders? It depends if I'm at my computer screen or not. If I'm going to be at the desk, I just do it manually. If I know I'm going to step away, I make sure I place an order. Always. Always, always, always. I don't want to leave an open position. And here's the thing, too. Like, that's not entirely true if it's an old position that I'm in, right? Like with ARC, right? I'm not too worried about it. You know, if I step away from the desk, I don't have to have an open order. I've been in it for 2.5 months. So happy to help, Fib. Yeah, it doesn't, I really don't care one way or the other what the market does. I do have 2 longs, 2 shorts. So, I don't really have an opinion on what I'd like from the market here. Doesn't matter a ton, to be honest with you. I don't really care one way or the other what the market does. Market wants to go higher. I've got a plan for that. If market wants to go lower, I've got a plan for that too. So doesn't really I don't control what the market does. I just have to have a contingency plan for both sides. That's the job. And then use progressive exposure to get your money to work for you and focus on stocks that are in leading groups. That's it. USAR. Isn't this a rare earth play? I mean, yeah, interesting pattern. This looks like an absolute headache is what this looks like. But could it be a higher low setup? And then, maybe even yesterday was the day to buy it? Yeah, maybe. Yeah, I like what XBI are doing. XBI and LabVIEW is going to move with XBI, but I do like what XBI is doing. Yeah, I agree. Yeah, these foreign names, international SE's acting awesome ever since earnings. Right? Not everything's acting like this. How would I position myself with Fed's cutting rates? The reality is even if they say they're going to cut rates, and even when they do cut rates, I don't know what's going to act best. That's the thing. My job is to react to what I see. And I don't know exactly what I'm going to see when we cut rates. So that's number one. I can have an idea of what can do well before they cut rates as a thesis for these should do well leading up to rate cuts, right? For instance, small caps, they should get pretty bulled up that rates are coming. Biotech should get pretty bulled up that rates are coming. Those can both use cheaper money. And that's effectively what happens when you get interest rate cuts. You get cheaper money. So, kind of along that line of thinking, and then I have that line of thinking, and I look at positioning, and I say to myself, the Russell, the IWM small caps is incredibly shorted. So that could have changed this week. Over the last few weeks, it's actually been outperforming the NASDAQ effectively every single day for the last 2 weeks, with the exception of like a day or two. But like every single day, it's like 50 basis points here, 80 basis points here, 50 basis points here, 100 basis points there, right? That's just how it is, like every day. So I don't necessarily know, but the NASDAQ is a pain in the ass because it's a crowded long. Is it too late to get into PDD? No. Why would it be too late? They have earnings on Monday. I mean, this thing doesn't even have an ascending 200. You think it's too late? I would just tell you, wait until the reaction on Monday. Asking is it too late to get into PDD is similar to asking last quarter here if it was too late to get into Sezzle. Right? Wait till the earnings. They gap up. Earnings are good. They're taken well. And then now all of a sudden, right? So just let earnings happen. I want to say it's like another, I'll tell you right now. So an hour and 15 minutes. He speaks in like an hour and 15 minutes, if I'm not mistaken. So whatever time that equals for you, I'm not entirely sure what time it is in Singapore right now. My thoughts on current Roblox short. They upgraded as it sits on the 50. Yes, I will only add when we break below the 50. I saw the upgrade this morning. And by the way, it's just that price is not seen since yesterday. So It's just going sideways, had this pop up to 118.5, and now we're back down to 116.5. Price upgrades, inclusions to the S&P 500, those are never, ever reasons to chase a stock higher. My thoughts on AMD, Palantir, and NVIDIA. I think AMD shouldn't be touched until after NVIDIA reports earnings. That's number one. I think it's just going to chop around aimlessly, which it's earned the right to do. And Palantir is hanging on for dear life to the 50-day. If I were in it, I'd be short from 180s like I tried to be, 184, and I just got stopped out. But I would still be short. And at this point, I don't really see a ton to do with it here. Patience, I think, is the best idea with Palantir at the moment. You used your favorite rare earth play at the moment? This one just got its absolute ass kicked the other day on a big pickup in volume. I mean, yeah, it could bounce back, but likely needs to do a little bit more digestion. Rigetti down low. I mean, Rigetti is probably going to single digits at some point. They make no money, man. Your local stripper makes more. What would you recommend for smaller account like 100K? What's the best to trade? Is it worth to hold above 10 and 20, or maybe is it better to exit the whole position after 3 to 5 days? No, my answer will always be the same. It's best to just let your position work, right? Imagine if I just told you it's best to sell after 3 to 5 days. The market gives you a correction, and then you find a stock that's showing tons of relative strength. So you've done the hard labor. You found the stock that was showing relative strength during a correction. And now all of a sudden you buy the breakout in hood, right? And you buy the breakout, or you buy it even, on this day, and then you sell after 3 to 5 days. So you bought it at 50, you sold it at 62, and you missed the rest of this, right? Could you imagine? Seems pretty shitty, doesn't it? Because it is. That would be terrible. You don't want to sell too early. What I would recommend you do is you take that $100,000 account, and you were to buy a, $15,000 position in a hood as it's breaking out, or you've tracked that relative strength and it looks like a winner, and you've got peanuts of risk. And once it moves for those 3 to 5 days, sell half your position and then let the other half work. And that $7,500 position just doubled for you, and you just grew your portfolio 10% or more. So, and meanwhile, you're looking for other names that are showing relative strength and doing the same thing. Your job is to hold stocks as long as possible. Like, you have no idea how high they can truly go. Yeah, Elf does not look too bad. Just needs to bounce back up. Now, yesterday was kind of weird because it also had a hammer bar like everything else on Wednesday, where it just kind of held in there. Not really a hammer bar, but a gap down followed by a move up, just like everything else. But then yesterday, kind of odd weakness. So, thoughts of buying GILT? No, it's too thin. Trades $7 million a day. Can I recommend any books or resources for studying technical setups? Yeah, Stan Weinstein, Secrets for Profiting in a Bull and Bear Market. How to Make Money in Stocks, Bill O'Neill. Mark Minervini, where he talks about the VCP pattern. How to handle a drawdown, please? Stop digging. If you're already in a drawdown, it's probably because you're not seeing things well. So you're either not seeing things well, or you're not paying attention to what actually is happening in the market. Maybe you're buying, maybe you're out here buying, breakouts when the market hasn't been giving breakouts. And then finally, it could just be that you're oversizing positions. right? So if you can't gain traction on one position and it's a 10% portfolio position, you can't gain traction on another, and you can't gain traction on another, your fourth position shouldn't be a 10% position. It should be a 5% position. And then another 5% position and another, until you can gain some traction. You're sizing down. In a healthy market, you could almost buy anything and it goes higher. And then you can go to a 10% position, and your next one's 10, and your next one's 10, and your next one's 15, and your next one's 10. And all of a sudden you're 50% invested in 3 days, right? Not because you're some magical genius. It's because you're in a healthy environment and you're probably focused on good groups, right? So if you're in a drawdown, size down, stop digging. The market will give it back to you. You just have to survive long enough for the environment to be better. And although the market's going up, it is incredibly choppy. And then the next thing I would do is ask yourself, what stocks have I taken losses on? If you've taken losses on random shitty stocks, and day trading worst of all, then yeah, you probably need to reevaluate your entire system. Yeah, Chad, this is actually a great question. How much weight do I put on rate of change in industry group ranking? Would you value industry group A with 6-month, 3-month, 1-month rankings of 50, 25, 10 over industry group B with rankings of 20, 20, 20? I do like to see that a group is strengthening up. Yes. Group A, we would give it a little bit more preference. Now, here's the thing, actually, now that I just said that out loud, Chad, while I do like to see that a group is strengthening, what then becomes more important is this. A group in group rank number 10 or number 20, they're both fine for me. The question then becomes, what do the technical setups look like within those groups? Like, have some just gotten a little extended? Have others gone up and then just gone sideways? And so maybe the group that's group number 20 has consolidated very nicely and has a few more setups that I can actually go to. So the important part is when I go to buy something, does it have a clean setup that I understand? Maybe those names maybe are breaking out on earnings. Do those names have good earnings and sales? And are obviously they in the right theme, which, being in the top 40 usually puts you in the right theme. So I won't put too much more emphasis on like a 10 versus 20, but I do like to see what you just said, them accelerating, right? It means they're being accumulated in a big way. Yeah, I just don't really love. Now, I wouldn't go shorting Bitcoin here, guys. The moment to have shorted Bitcoin was a rejection of that all-time high on 8/14, right? We're now down basically 6-7 days in a row. So, some sideways here, if it went and then broke down, that would be something. Now, if we just broke down here, that'd be kind of an even weaker look, but not something I'm necessarily looking to short. But Bitcoin will, in my opinion, be kind of like a sentiment gauge. Or I've said this before, like Bitcoin is a place where money goes to when there's like extra money laying around, right? Where you're just like, yeah, I've got a nice portfolio. I own this and that, and I've had these for years and blah, blah, blah. And I've got some extra money to work with. F it. I don't own any Bitcoin. I'm going to go buy some Bitcoin, right? So, if Bitcoin kind of starts to falter, I've said this before. Think to yourself how Bitcoin bottomed in 2022. It was when Sam Bankman-Fried was basically arrested for fraud. The worst news possible, right? And now think about Bitcoin, how it may have potentially topped. Pro-crypto government, Michael Saylor, Tom Lee buying a ton of Ethereum, companies adding Dogecoin to their treasury balance sheet. Imagine that shit. You've got now regulation potentially for Bitcoin. You've got the sovereigns buying, a sovereign wealth fund being created for it. You've got Harvard buying it, the smartest quote unquote people on earth who said it's more likely to go back to 100 than 100,000. And, here they are over 100,000 finally buying it. I mean, what would be the irony in this, arguably one of the smartest colleges on earth buying Bitcoin and that being near the top for a while, right? Before, it gets cut by 50% or something, right? That would be some very funny irony. And that's the thing. That's how markets move. You get everybody piled onto one side of the boat, right? And that's how things kind of top. The news is as good as can be, and boom, that's the high. And then at the bottom, oh my God, this guy did fraud, defrauded investors. Tom Brady was on the commercials. I can't believe it. This is terrible for the industry. Boom, that's the bottom. Do I consider fundamentals with taking trades? Any resources for this? Yeah, I do. Big time. You've got the company's earnings reports. You've got something like DeepView. You got something like Market Surge. FinViz is fine. What you really want to see is you want to see the stocks that end up making the biggest moves in the world all have accelerating earnings and sales before they make a big move. So that's just good to remember. Accelerating earnings and sales. Accelerating quarter over quarter, right? And they tend to have accelerating earnings and sales for 3 quarters before they make a really big move. So, you're not really missing anything. And now you could trade stocks without fundamentals, but they have to be in a super hot theme, right? Like when quantum stocks, were going up, they don't really have fundamentals, right? They make no money. I mean, like QUBT made $61,000 last quarter. I mean, I have regular trades that are much larger than that. The company's a complete joke, yet still, right? They hang around, right? Because it's in a theme that's kind of slowly dwindling away. It's kind of fading away. If you look at like a Rigetti or IONQ or even QBTS. But yeah, that's how that works, right? If you're in a really strong theme, you don't need fundamentals. But if you want the stock to have duration and go on a super huge move, accelerating earnings and sales is very important. Think about NVIDIA. Think about how much their earnings and sales have grown over the last 2-3 years. If I've got a setup that's on watch and there's a nice reaction to Jackson Hole, I would start using progressive exposure right away. Like I've already got a couple longs, right, in ARC and CCL, but there are other things that I could see myself trying to buy, like TNA, for instance. If gold's acting well, something like AEM. I don't know that I'd be buying any of the semiconductors today. I still like the Chinese stocks, PDD and BABA, but I'm going to wait on those. But effectively, you've got your kind of basket of stocks, and I'm going to buy one. If I'm gaining a little bit of traction, I'm going to buy something else. Not today. Like I don't go from 30% or 20% invested to 100% invested in a day. Like that would take me 2 weeks in a really, really healthy environment. 2-3 weeks. How do I determine when it's time to track relative strength names versus buying into them? Simple. Is the market going up or down? Right? When the market's going down, the names showing best relative strength and a time to look for them is when the market's going down or when the market's choppy. When the market's going up is when I go looking for those names that had relative strength. So you track relative strength when the market's down and choppy. You trade relative strength when the market's going up, right? So the stocks that were strong when the market's going down should be the ones to catch your eye. It depends what your stop is. AU's one I personally hated the most because of how gappy this thing always has been. It's been such a gappy chart. Like look at the daily on this. Every day, gap, a gap, a gap down, a gap up, another gap, another gap, another gap, another gap, another gap, another gap, a gap down. Like, I do not buy stocks that gap this much. I understand you thought it was gold. You thought it was going to be good. I'm sure you probably do this downtrending line. I can't blame you. Breaking prior day high, fine. But I avoid stocks that gap that much. But hindsight's 2020. All you can do is, if it hits your stop, take your exit. I mean, what else are you supposed to do? Yeah, MSOS has been acting well. And again, a lot of those names don't really have great fundamentals. They got nice looking technicals at the moment, but their fundamentals are kind of, weed's getting cheaper by like the week. What am I looking for to indicate we're going higher or lower from here? Well, I don't really know. What I do know is positioning and how crowded that is at the moment. What I do know is what stocks have been doing for earnings, and that is gapping up and taking a shit or just gapping down. Very few stocks have just gapped up, held higher, gone higher, right? For every one stock that I could find you that has gapped up and then pressed higher for a few days, few weeks, and not given those gains back, I could find you 10 that have gapped up and given back that whole move or just gapped down, right? So I'm just listening to what stocks are doing. I'm watching what they're doing, and I'm not arguing with it. I'm not formulating my own opinion on that. I'm just seeing what they're doing, and I'm like, wow, that's what's happening here. And it's by an overwhelming majority that stocks are gapping up and crapping or just gapping down and getting smoked, right? So, that's it, right? That's just what's happening. It's just an observation. And that kind of helps you determine that, okay, maybe the market still wants to go up, but because a lot of stocks are doing this, it more than likely means after a 40% move that the market's going to go sideways here. Right? Like the market, while a bunch of stocks just keep getting their asses kicked on earnings, it's likely that the market just ends up going sideways. So, when you get to earnings season, that's helpful. That's very helpful. Yeah, I don't care about, I don't really understand this question, DS. You might have to rephrase it. You are not looking at all on high relative strength stocks in a weak group. I don't like to look at weak groups. So like industry group number 197, right? Or 150 or whatever. So for instance, let me just take a peek right now. Groups, sector, industry. So like over the last 3 months, my eyes will not be focused on infotech, chemicals, staffing, beverage brewers, consulting services, textile manufacturing, software application, right? I'm not looking there. So effectively, I'm not looking to catch the bottom on Salesforce, right? Look at how shitty this thing has been since April. It's gone nowhere. A ripping, roaring bull market and Salesforce has gone nowhere? Really? Since this whole year, this thing is down this much, and I'm supposed to look for the bottom on this thing? No, right? So that is something that, and software application, let's just kind of think about and go through some of these names, right? Adobe, I won't be looking for the bottom. Let me pull up my screen here so I can see these a little bit better. God, some of these things look horrible. Let me sort these by price so I can see them a little bit better. Market cap. Okay. So Adobe was one. Autodesk looks like shit. CDNS, this one looked good for a moment and is still hanging out the best in the group. What else do we got here? Datadog, since they got included in the S&P 500, looks pretty rough. Duolingo looks terrible. FICO looks pretty terrible. Let's keep going. GWRE looks pretty rough. Intuit looks pretty rough. Hubs looks pretty rough. Actually, Intuit just gapped down on earnings last night too. So now this thing's gapping $645. So now below the 200 simple moving average. So how to determine which stocks are in groups? You do exactly what I just did. You literally sort them by group. Yeah, sort stocks, and Finviz is a great resource for that. No, if you have a 200K account, by the way, that's not small. I mean, 200K is not bad. But you don't have to focus on just strictly large caps. But, you can make a ton of money on 200K. So, your number one goal, apart from making money, is protecting your money, right? The stock market can be a very brutal place where you can lose that 200 grand quickly. So your job is to protect it first and foremost. And I would do what I would tell anybody to do. Focus on stocks and leading groups. Learn a few technical setups you understand. Learn the entry tactics for those technical setups. Learn when those technical setups are most in favor, what kind of market conditions are needed when these technical setups trigger that give you the best opportunity for you to be green right away. Because, or if you're wrong, which by the way, I do all of what I just said, and I'm still wrong 65% of the time. The difference is if I'm not mistaken, I think it's $7 to every $1 I lose, according to my stats. Hold on, let me just pull this up. I'm just going to look at this whole year, or we'll go from like when this bull market started. We'll go like April 1st to August 22nd. So my win rate is 37%, right? My win rate is 37%. And since the bull market started in April, I'm very bright green. So, imagine being able to be wrong often and still make money. That's the whole idea because of how much uncertainty is in the market. But when you align yourself in a good group with a technical setup you understand, size properly, let it work when it's working, those things are important. So those things are important. They make up for all the little paper cut losses that you would have. Can I take a look at MNMD, MindMed? Is that what that is? It's just so thin. It's just very thin, right? These little cheapy stocks like this. Now, I do like the move this thing made here. I like the whole new base that it's built. But, it's really been doing nothing for over a year. I don't hate this consolidation, though. It's very speculative, right? It only trades 10 million bucks a day. BE chart's one of the best ones in the market. I just don't see a setup here yet, right? Super strength. Like I was looking at this thing after this push, and then it got nice and tight right up against the 20. But I just never took it. What happened to IONQ? Well, it became a laggard after it topped, right? This thing topped in January, and while the market went to go make a new all-time high and then some, this thing couldn't even take out its highs in May. And all it's done while the market's been pressing higher is sideways. So you become a laggard, and they make no money, man. They're a science experiment. IONQ's not people are like, oh, but quantum's the future. Okay. Then somebody explain to me why IBM, the company who's been working on it for 45 years since the 1980s, hasn't figured it out. Okay, when somebody comes back to me with a good answer, why IBM makes no money on quantum, why Google makes no money on quantum, why Microsoft makes no money on quantum, and then you ask what happened to IONQ, we'll see you back at $10. If those three behemoths can't figure out quantum, what gives you the impression that IONQ is going to figure it out? Thoughts on Shell? What's the ticker symbol there? SHEL. That makes sense. Yeah, SHEL, nice. So a lot of these stocks have these nice little bases set up in the oil and gas space. Kind of makes me feel like oil and gas is going to do something. You know, Dino looked really good a few days ago, and you know, a bit of follow through. Nothing spectacular, but not bad. Do I recommend making a model book? Do you mean something like these? Yes, I recommend it in a big way. Yeah, I recommend it big time. If so, how do you do it? You take a chart, just like mine. You zoom out, like you go to like NVIDIA, right? Because this has been a pretty model stock move. And it gets above the 200, creates a flat base, right what the earnings were, right what got it over the 200, right? Started the AI theme, right? I had XYZ earnings. Earnings again, what were they? 5-month flat base breakout after a 250% move, right? What caused the move? What was going on at the time? And annotate it, blow it up, print it out, laminate it, hole punch it, put it in a binder, study it, and then study stocks that ended up topping, right? That topped, right? So like find them and look at a stock like EMPH, right? And go back on the weekly and study what this stage 3 top looked like, right? After it finally broke down and then it made this ugly move down, right? What was the cause? What was the group doing? Was there any catalyst, et cetera, et cetera, et cetera? Write any notes, write on the chart, blow it up, annotate it, laminate it, hole punch it, study it. That's all you can do. It's a lot of legwork. I mean, mine took me a shitload of time just to do. So, or you can pay the guys at TraderLine who have got one on Amazon, and they do all the hard work for you. So, and that's fine. You can do that too. Yeah, you could play Nugget for gold miners. No, I don't really look at the VIX. The VIX just tells you on average how much the stock market's going to move per day. Doesn't matter to me. That's correct. Yeah, that's why it gapped so much overnight with AU. My thoughts on Unity. I like saying the ticker symbol. Unity reminds me of Dave Chappelle. Those are my thoughts on you. Yes, TEM is on the watch list. Yeah, Unity, for one, it's going to have to get going over this little pivot here, over the earnings high. What do I think of PPTA? Yeah, not a bad looking chart. This thing has already made a monster move. Higher lows. I mean, it looks all right. A bit thin. That's the first thing. Nike's a bit slow. This thing moves 2.2% per day. I would wait until the 200 is in an established uptrend. Yeah, Tempest does have relative strength. It is 100% on watch, but I don't really see a spot to buy Tempest. So if it just like took off right from here, unfortunately, I wouldn't have a spot to get in, which sucks. I trade crypto-related names in the stock market, but I don't trade cryptos. Regarding how to grow a 100K account, your numbers don't add up. Could you clarify the math? What are you asking exactly? If you bought a stock for $10,000 and it doubles, you just made 10 grand. You just grew your portfolio 10%. I don't understand where my math was crazy there. And if you trim some off, maybe you made 7,500, but I don't understand what the hell the question is. My math at 8:20 in the mornings, maybe not the best, but are you twisting me over pennies here? I don't understand. Where do I look for industry groups? Yeah, IBD is good. FinViz works. My thoughts on AppLovin. I love the hammer candle that it gave the other day, but it looks like a lot of the other stocks in the market. And, it just, I don't see it. I talked about this on last night's watch list video. I just don't see a setup just yet. I like the hammer candle. I like that it was green again, yesterday, but I just don't have a setup to buy it. That's the problem. Milo, that's a great idea. Thoughts on Las Vegas Sands? I noticed. So yeah, LVS is it's very slow. It's very slow, but LVS has two components. It's one, it's like a travel related stock, and then two, it's like gaming and gambling. And I look at something like DraftKings and I go, yeah, that looks pretty dang good. And I look at something like RSI and I go, yeah, that looks pretty good. So these like gambling stocks have a good component to them, something in the water. And I personally think that something in the water is football season. When you were back testing and journaling, what metrics do I track? I like to look at my win-loss ratio. I like to track the actual names that I'm trading. I like to then look back at what environment, I was trading those names in, so I can call myself an idiot for not recognizing whatever it might have been that I needed to recognize. Like, I don't really think about like the average daily gain anymore. Like, that doesn't really matter. Profit factor, I guess, is another important one. But again, that doesn't really matter. You'll know if you're making money if you've made money. So just tracking the individual names when I'm trading them, and then, knowing the date in which you trade them. So you can like look back after 30 days and been like, okay, I bought this, I bought this, I bought this. What the hell went wrong? Why does being early to the best place feel wrong at first? I don't know that it feels wrong, because if you're have a good entry tactic, you should also be green. So right away. If not, if I'm red and we break low of day, I'm out with a really small loss. Yeah, 37%. I mean, I don't that's about it. That's all you really need to do. I mean, Jeff Sun mentions it all the time. I think this year he's like 25%. And, I'm assuming he's bright green as well. So that's just how it goes, right? As long as you make way more than you lose with a 25% win ratio, totally fine, right? I don't want to have like, people with like that win 90% of the time. Like, when you see those kind of stats, they're just scalping, right? They're never going to make 7-figure trades. I would, dude, but I can't. I got a bunch of students waiting on me, and I kind of got to get out of here. What do I think of KGC? Guys, just a couple more questions. I realize I'm already late. KGC looks awesome. It's obviously going to move with GDXU. I just want to see gold acting better, right? Like, this is a little bit extended from the 50 is the problem. Yeah, Unity looks fine. I use a journal and physical pen and paper at the end of the day. But I do use a trading journal. I use 2 trading journals, actually. I use a TraderView and TradeZella. UNH is not about to break out. Breakouts don't occur below the 200 simple moving average. Yeah, CRDO is fine, but I would kind of avoid semis right now until after NVIDIA reports earnings. TSM looking crazy. I want to say I own that thing at 202. I bought this thing here. But guys, you start to reside under the 50-day, right? Just a little bit. Look at what happened to CrowdStrike. Okay, you start to reside under the 50-day just a little bit, and then eventually you roll over, right? You don't want to, you need to be back above the 50. Anyway, guys, I appreciate you guys a ton. You guys enjoy your weekend. Be safe out there. Have a fun weekend. I will see you guys on Monday. Trade them well today, and I'll see you guys in a few days. Thanks for being here. Peace.